What is up, traders, and welcome back to Uplift Markets. Today we're diving into the massive 28% crash in Hims & Hers stock after breaking news that Novo Nordisk has officially cut ties with the company. Let's get straight into the story and analyze further if this is a buying opportunity. Before we start off, please feel free to subscribe to the Uplift Markets newsletter, where we provide personal AI insights and AI-powered trade setups straight to your inbox. This morning, Novo Nordisk, the pharmaceutical giant behind Wegovy, announced it is terminating its partnership with Hims & Hers. The main reason is that Novo has claimed that Hims was selling compounded versions of Wegovy, basically knockoffs made by compounding pharmacies, under the false guise of personalization. They accuse Hims of doing the following, which would be violating the FDA rules, promoting unapproved and potentially unsafe drugs to customers, as well as engaging in deceptive marketing practices. Now, Novo's vice president said patient safety is their top priority, and that Hims wasn't transitioning away from these compounded versions fast enough after Wegovy's shortage ended in May. That's why they pulled the plug. Now, obviously, there's going to be a legal risk for the company. Citi analyst Daniel Grosslight came out swinging, saying that this move increases the legal risk substantially for Hims. He even said it was surprising that the original deal didn't include any guardrails around the company's compounding practices in the first place. Now, here's where things get a little bit messy. Hims CEO Andrew Dudum fired back on X, accusing Novo Nordisk of misleading the public, trying to steer all patients toward Wegovy for commercial gain, and interfering with clinical freedom. The CEO emphasized that Hims will continue to offer the treatments that best suit the individual patient's needs, not just what a pharma company wants. Take a little bit of analysis on the news here.
Another drug called amycretin, and that drug showed promising weight loss, but there were some concerning rates of side effects in a small early stage trial. They're already going to phase 3, but again, some questions there. So this was not quite the weekend that Novo wanted to quiet those doubts about the pipeline. And then also this morning, the company is announcing that it's pulling Wegovy from telehealth platforms Hims & Hers just 1 month into this collaboration because Hims continues to sell compounded GLP-1s on the site.
Now, that just shows the seriousness, right, behind the news. Now, obviously, investors panicked, and Hims saw a very nice drop of 28% intraday. Novo Nordisk as well also slid around 6%, but Wall Street clearly sees that this is more than just a bad press release. So let's analyze this stock. Let's pull up a daily, and as you guys can see, this daily chart on Novo Nordisk was looking quite bullish, right? On previous days before this news announcement and after the earnings, we saw the stock above its 50 EMA, which is this yellow line, and above the 200 EMA, showing that overall the buyers weren't in control. But ever since this news, we broke a key area of support here at the $52 level, which is right here. This area was a prior area of support and it was broken, and we're also now below the 50 EMA. This shows us that overall there was a major overall shift in supply and demand, and the only area left of support is a 200 EMA. I firmly believe that this is the Alamo for the stock, and if it fails to hold, we will only see further downside, obviously compounding with the fundamental news that comes in and overall development of the news that just came in. So what I would like to see on the stock overall to see if this is going to be strong is a pullback towards the 200 EMA, right? Probably going to see that. Find some support there, capture some liquidity at the bottom, and slowly start to see, the strength after that dip, right? Start to see the stock bounce, and we would like to see some type of general action like this, where the stock finds support at the 200, right? This would be the best case scenario, which we could allow a nice entry around this price and put a clear stop loss right here, or even to the lows that we formed during April. This is clearly the last area of support for the stock, and this could be considered as an Alamo. If this stock fails to hold the 200 EMA, then we will see further downside towards $24 and possibly even lower towards the levels of the IPO, towards maybe $14. So also we got to consider here that the volume that came in on this day, on this news pretty much, is 140 million shares of volume, which is close to the overall volume that came in during the earnings, right? So seeing this intense selling volume also has to be accounted for, right? The buyers are obviously going to take a pause. They're going to reconsider, and shorts are going to be pretty aggressive. So in this term, I pretty much see the stock kind of, slowly finding its footing towards the 200, and that's where it has to hold. If not, then the stock is an overall sell, right? So as you guys know, the market is unpredictable, and we always have to take our stop loss considerably. The main job of a trader is to have risk management as number one. So for that reason, if you guys like this video, subscribe to the channel, and as always, stay uplifted and don't let the market whip you guys out. I'll see you guys on the next one. Peace.